Welcome, my name is Vishal Texanani. Today I'm speaking to Richard Henfrey, the CEO of Blackmores, and we're going to talk about the company's first half results, what's happening in China, and the market reaction to the company's results. Richard, thank you so much for joining me on such short notice.
It's really a pleasure, Vishal. Yeah.
Great. So Richard, let's talk about the results. So the market has clearly honed in on the 11% drop in China segment sales. Can you explain to investors what's happening in China?
Yeah, look, our China segment, as we report it, is down 11%, but what's behind that is a big shift in our routes to market to China. And actually, if you add in the sales to Australian retailers that end up being shipped to Chinese consumers, our total sales to Chinese consumers is up 8% in the period.
Okay, but what's driven sales to go lower? You mentioned that there is a shift in marketing strategies. Your competitors are targeting the export market more directly. What's happening there?
So the environment in China is more competitive, but we absolutely see there's an enormous long-term opportunity there. But one of the things we have to get used to is that China is always changing. And we've had these channel shifts in the past. They tend to be short term, and we'll work through them.
Okay, so let's talk about some of the positives from the report. So sales in Korea, Indonesia, Hong Kong, all growing quite strongly. Have investors overlooked this, given what's happened to the shares today?
Yeah, look, we're building a business across Asia that's that seeks to have a market-leading position in all of the markets that we operate in, and it is a portfolio play. So it's great to see that whole of Asia business performing so well. I do understand investors' interest in China. It's a big thematic, but we see Indonesia as an enormous growth opportunity in the future. Indonesia is going to be the 5th largest economy in the world by 2030, and it's our closest neighbour, and it's a rapidly growing market in terms of the population and wealth in that market. So we see opportunities like that across Asia, and it's a great space to be in.
Okay. So let's talk about your margins and also the marketing and selling expenses. So you flagged quite an increase, a significant investment in marketing and selling expenses. Given what's happened in China, should investors expect even more expenses, and what does that mean for margins?
But we've got a number of initiatives going on across the business that are designed to drive long-term growth. So that's investing in our brand, as you mentioned. It's also investing in capability in the business and other long-term growth initiatives. And we chose to continue that investment through this period, and we believe in the long-term future of our business in China and across the region. So we will continue to invest. Obviously, as I referenced, the China market is very rapidly evolving and changing, so we always need to make sure that we're focusing that investment in the right places and in the right way. So I think the mix may change a little bit, but the investment for long-term growth.
Any details you want to share with investors around what you're going to do in China to get sales growing again?
So we're working very closely with a number of the major cross-border e-commerce platforms, so particularly Alibaba and NetEase Koala. We've got an opportunity to build our business, which is over a longer term period of time in offline bricks and mortar retail. And I think from the point of view of marketing, as you mentioned, we're looking at the mix of what's long-term strategic brand building work versus shorter term, more tactical point of sale opportunities. And I think just tuning up that mix a bit. But again, there's a lot of opportunity in China, and it's about being very deliberate, choiceful, and emphatic in the choices that we make.
Okay. So let's talk about some of the other facets of the results. So you flagged that the second half won't be better than the first half. Does that mean profits in the second half will be lower or about the same?
It means profits in the second half will not quite meet the first half, and that's driven by the continuing investment while we work through some of these challenges in China.
Okay. And do you want to talk about the business improvement program? So you're stripping out $60 million of costs?
We've got a plan to remove $60 million of cost from the business through efficiency drive, so we call it business improvement program. That'll cover the investments that we've made and continue to make in systems and capability, as well as our acquisition of a manufacturing facility in Melbourne that'll deliver some gross margin improvements. And then we expect to be able to invest some of the savings that we make into more brand building and more growth initiatives, as well as returning some to the bottom line.
Okay. And last question today, what we've seen from the market, is this an overreaction from investors?
Look, I really understand people's interest in China. I do think that the market needs to recognise that many Australian businesses have a huge opportunity in China. There are going to be changes. We're focused on the long term, and we're about building a great, valuable business in China.
Are any political risks interfering with your business plan?
Look, not specifically. I think we see more risk than upside in China-US trade war. There may be a short-term benefit to Australian businesses in that, but over time, I don't think anybody wins from trade barriers going up and a reversal of what's been decades of opening up of multilateral trade. I think that's a little bit of a risk, but really the short-term issues that we have at the moment, I see as just that, short-term.
Okay, Richard, thank you so much for your time and sharing your insights on Blackmore's results with our audience. Really appreciate it. It's a pleasure. I hope you found this video informative. Now, please remember what we talked about today isn't investment advice. If you're thinking about transacting in Blackmore's shares, it's really important that you do your research and consider seeking financial advice. My name is Vishal Texnani, and I'll see you next time.